Hello and welcome to an episode of Casual Friday. I'm here with the Duck. As always, the show is brought to you by Woo. Links available in the description below. Especially check out their social trading. There's some fun copy trading features, counter trading features, and we'll probably do a video or write up on that in the near future. It's also Saturday, which I appreciate. Now, there is a good reason the show didn't come out on Friday, and that good reason is that I forgot. But I didn't forget today, so here we are. I mean, Don, listen, we don't want to spoil our audience, right? Because we had Monday markets on Monday, your stream on Wednesday. There's no way we go 3 for 3 after a layoff. We need to show some signs of mental degradation and rust. So.
I mean, that is true, but we're also technically running a newsletter that we haven't been writing in I don't know how long. So as long as you pretend we don't have that, that's fine and dandy.
Yeah. I mean, also let us know in the comments if you want the newsletter to come back in one form or another. It's supposed to, and it'll probably be done via Woo's blog, which is quite cool. But yeah, we'd love to hear from you dinosaurs who used to read the newsletter if you want to see that come back. And it's a nice thing because it's basically like an amalgam of trading systems. It just takes the most reasonable, the most conservative approach with basically market structure levels, high time frame candle closes, and just spits stuff out really, instead of all this discretionary stuff like me taking one trade every 3 years, you buying resistance, selling support. Like it kind of takes filters that noise away and gives something more or less reasonable from a TA perspective.
Yeah, I think it was great.
Yeah,
but
we just need some originality into it as well as far as sections go. Because, dude, imagine trying to write it in the last few months with with how BTC's been trading. That would have been not so inspiring.
I mean, imagine making a show like 3 times a week with Bitcoin, like with how Bitcoin's been trading.
Yeah,
not much better, to be fair.
We should just start a trench show and pump and dump and go to jail.
People would appreciate it.
Yeah, that's the weird thing, right? If we did like a trench section where it's like, our low cap picks, people are like, oh, it's so nice to see these guys finally fucking wake up to how trading is working, etc. It's very weird.
Yeah,
it's done a full 180 actually, right? Relative to what used to happen. Like you'd show like a lower cap coin on a centralized exchange, like a Bittrex or a Polo, and people would be like, dude, what the fuck is wrong with you? Look at like the volume on this thing and the market cap. Like you're scamming piece of shit, whatever. Whereas now, if you don't do that, it's like, oh, you fossilized, ossified, dinosaur-looking motherfucker. You're so irrelevant. Like, get out of here.
Yeah, I think people are so starving for volatility that they're gonna take the pump and dump from influencers over just not having it.
Yeah.
Because like that's how the markets move now, right? Like some influencer or some bigger Twitter personality writes a tweet about some dog shit meme, and then that meme gets eyes on it and it's gonna start trading. Because everything else is not really trading. It's just like being there, right? But as long as you have a few Twitter eyes on it, that's when it starts moving. So people are like just begging for it. And then they hope that, like, let's say we did like this on the show and then we tweet about it later. They hope that they would come in early by watching the show, and then they can dump on the people later down the line. It's an interesting market dynamic, not gonna lie. We've seen it before, where it's basically just like with the paid groups, where people would like buy a coin, then kind of promote it to their paid group, and then the paid group would buy the coin, and then that person would shill it to Twitter, and everyone in the paid group would shill it to Twitter, and then they'd just make a bunch of percent and be happy with it.
It's like that meme of the birds shitting on each other.
Yeah, exactly. So that's what people want. They want us to shit on them, which I'm not too interested in. Personally, it's not really something I'm into too much. But
no, there's also, I mean, again, a sort of topic we keep coming back to is just how professional this is becoming and sort of industrialized. So this might, I don't know to what extent this is common knowledge, but there are people who specifically, whose job is to acquire and process the deal flow through to big influencers and people with paid groups, etc., etc. So the chain ends up being like, I'm the project or the dev or the founder of the BD. I go to X paid group influencer, big account, kind of low cap coin guy. And he, so the dev has allocation. Then the influencer's BD obviously insider trades that and buys some ahead of it. He gives it to the influencer who then buys some ahead of sharing it, etc. Then it goes to the paid group, and then it trickles down to Twitter, and then like the chain is actually insane if you think about it.
Yeah.
And if you're joining from the Twitter call, yeah, you're not like super early in that hierarchy of things.
Yeah, but sometimes still enough, because
Still enough,
like,
yeah.
and I think this is kind of why like this whole thing has gotten like a better name to it than before, and it's because basically all that volume, like people are monitoring volume now more so than in the past, right? Where it's like you see all of these people just buying stuff, and then even when it gets on Twitter, like it gets a bunch of volume, which kind of just gets more people in, because they're like, oh, this is there's like flow there. And even if they're like shorting, like the moment people short it because they're like, oh yeah, that's just a pump and dump, whatever, they get squeezed and all that kind of stuff. So you have a bunch of market dynamics where it's just like super PvP. But like I said, it's moving, you can trade it. And that's why people don't mind it too much anymore, because nothing else is moving really.
Yeah, it's a
Stupid
weird
world we live
reward
in.
mechanism.
Yeah.
Thing is, and I'd love to hear from the audience on this as well, but you especially. I feel like I'm in a shit spot, having like a double conflict of interest of sorts. Now, the term conflict of interest doesn't exist in crypto, like, right? Like we call that edge, if anything. That's kind of how it works in this industry. But basically, and I've sort of spoken about the first half of this before, I'm known for not doing any type of like shills token stuff or whatever, like specifically pre-seed or low caps, any of that type of stuff. And I will still get probably about 5 to 10 as a minimum DMs per day from projects, devs, coins, BDs, etc. Being like, we're doing a pre-sale. This is the KOL round. We can give you like this much supply or just straight up this much in USDT, but often it's in the token. These other people are involved. Join the Telegram group, and let's make this happen, type of thing. And obviously, like I feel like getting that many DMs, you have to make a choice as far as your participation in the trenches. You either just say, fuck it, I'm going to go full insider mode and take maximum advantage of this type of stuff, or you have to opt out completely. I'm not convinced there's like a nice middle ground you can walk where you use your audience and your connections and your better terms for any deal you get, etc., and you kind of toe some sort of middle line between pump and dumper and I don't know what, like ethical shiller or something. I just don't think it can be done, right?
No.
To me, it's a binary. If you have access to that amount of asymmetry in deal flow, you either just say, fuck it, I'm moving to a country with no extradition treaty to the US and just making my money in like 3 to 6 months, or you say like the game is too rigged and there's too much of a conflict and too much asymmetry and I'm not going to participate. So obviously chosen the second one on that as far as trench stuff goes. But now more recently, even on the centralized exchange, like perp trading, whatever type of stuff, I'm getting weird feelings of conflict of interest because of breakout, obviously. I have, as you know, visibility into like all the positions and the volume traded and the most traded coins and, people being long, short, etc. And the data's starting to become non-trivial because, I mean, last week we did like, 3 billion in volume or something, which is pretty fucking serious, right? Like for one venue. And that also makes me somewhat uncomfortable because, there are really shit traders and I can see all their positions. There are really, really good traders. I can see all their positions. I can see like aggregate data. And I'm kind of like, it sort of just leaves this weird feeling because there's probably, and I haven't run any numbers or done any markouts, but there's probably like a lot of alpha there. Straight up, as far, this is like peak, in many cases, just like peak retail active day trader flow. That I have full visibility into, like when the market's going up, how people position, like all this type of stuff, and having access to that and then trading my own personal account / book at the same time sort of feels uncomfortable. Now, it could just be retarded and coping and coming up with an excuse not to punt this type of stuff. But how would you feel in that type of situation?
No, I mean, you definitely have edge, just especially in the PvP market like this, right? Like when the market's going sideways, this is where this kind of information is the most valuable, just because, I mean, you can squeeze people either way, really. Like you can, and you will know, like, given the market is PvP, if you see like an imbalance, right? Like you can take advantage of that quite easily. So yeah, I mean, it is kind of like an odd situation. I mean, I kind of agree with you that there is a conflict of interest there. I think on the breakout side of things, less so than on the trenches, just because like with the trenches, it's really odd, right? Would you get into like a like not pre-sale, but like an early round, or like not an early, but like the following round after all the influencers are in, if you got the influencer deal in the first place, right? Like that seems a little bit odd. You know what I mean? Like you would never take that deal just because you could have had a much better deal. So by not taking the influencer deal that you're offered, you will also just not take the normal deal that other people can take, and then it's just like this is just a shit situation to be in.
Yes.
And then, yeah, on the breakout side of things, I mean, if you're mercilessly PvPing everyone in the order books, that also be kind of fucked up. Depends on the time frames, I think. If you zoom out far enough, doesn't really matter too much. But like lower time frames, like that's, I think, yeah, could become a conflict of interest quite quickly. But like you said, that's edge in crypto. So
yeah, conflict of interest and illegality is edge in crypto. Yeah, okay, interesting. I'll be curious to know what the audience thinks as well, but they're probably curious about the market more so than this philosophical conflict of interest bullshit.
Yeah.
So first and foremost, Don, you were shilling a rare appearance on your timeline. There was the quarterly time frame. You were clearly getting fed up with the noise of the fast-moving monthly.
Yeah.
So you decided to pull out the quarterly, which, I mean, that's not a bad-looking chart, right?
No, it's quite good. Yeah, I would say like just generally when you zoom out far enough, it's
Here we go, dude. This is like the tweet I put out. You know, also the timing of that ended up being quite funny. When the market started dipping, I did that shit post being like the market's dipping and you bull posted, here's what you can do.
Yeah.
And one of them was actually just like zoom out, but it's clearly a very effective remedy.
Yeah, I mean, technically speaking, you're actually doing just fine if you're zooming out. The problem with crypto and zooming out is like you zoom out and the dip, the crash to 16K looks like a dip, right? Like when you're on the quarterly chart and you look at the price action from like 2021 to 2022, like that's a fucking dip, right? But that doesn't really tell the whole
Yeah, it's just
story.
like
Like
one candle, bro. You know, one candle and
yeah,
then a bit of consolidation.
like it's one wick, one candle, and a
Yeah.
little bit of consolidation, and it's basically taken the entire industry out the back, right? So like it does help giving you perspective, but it doesn't like you're still kind of fucked. Like if you bought 60K and you're at 16K and you're just like zooming out and you're like, oh, still not that bad. You're kind of right, but you're still fucked. But yeah, I don't know. Like I zoom out on the quarterly, I look at that thing and I'm like, it's not that bad. It's like two candles after a massive kind of move, like two consolidation candles after a massive move, not bad. But then when you think about what that actually means for the market, and that's actually just 6 to 9 months of just sideways, that's quite brutal. Just boring stuff right now, really. It's not like this the first time either, though.
Yes.
Like we do get these kind of lengthy consolidation periods. It's just usually not at all-time high levels.
Yeah, that's really the standout anomaly with all of this stuff, right? It's the proximity to all-time high. I remember when we just started trading around 60, 70K, we were kind of going through historical examples and saying, yeah, well, there tends to be a bit of a sort of flush, if you will, pre-all-time high breakout or even a pullback because the market just positions way too aggressively before it actually happens. But usually that's a matter of days/weeks, certainly not like half a year, which makes this very weird. And same with the monthly, right? This length of consolidation in general is weird, but then the weirdness is doubled given where it's taking place.
Yeah, and how tight it is this time too, right? Like usually when you look at these like larger consolidations on crypto generally, they're usually in a range that is massive. In this case, it's not that big. Like the candle bodies that you have in this, like I mean, they're not that big. Like this is 10%, 15% maybe of a range near all-time high. Like that's really, really odd. I can't really, besides the ETF, what I think is one of the reasons why this is because of the ETF. Basically, a bunch of people were front running the ETF, and then we actually got good ETF flows, which took the market higher. But all of those people front running and all those kind of like just all that money that was in the market that was speculating on the ETF, It's just basically like getting consolidated out, right? Like finding new buyers. Like you have new ETF buyers. Like ETF flows are still, as far as the last time I looked at it, was quite good, right? Like ETF flows generally. So I think it's a bunch of speculators basically giving their stuff, like their allocation, to the ETF guys. And I think that's why this is trading this way, like one of the reasons why, but it's still like really, really odd, just odd behavior for crypto. Like it's not normal. But maybe that's the new paradigm we're trading in now with the ETF.
I mean, we've just solved the BTC price. It's more or less 60K. That's like
Which,
fair value.
I mean, honestly, like whenever we made this joke in the past, right? I was like, I mean, didn't feel as okay as 60K, right? Like I look at
Right.
60K and I'm like, we solved the Bitcoin price. Like 60K seems quite a decent price.
Yeah,
Honestly.
forever.
You know, like 6K was like, I mean, fair enough, but that doesn't seem that like crazy. 60K, honestly, like that's a high number when you think about it,
It is,
right?
it is.
Like 60K for one Chinese Bitcoin. Do you remember that?
Oh, that's an all-time classic. Yeah, it's like
Yeah,
one
I mean,
Chinese Bitcoin and then the one Russian Ethereum meme.
yeah, exactly. So I mean, that seems quite like that seems a decent price. I'm not hating. Like this, anyone that gets depressed while looking at the Bitcoin chart, I think is like either is a completely newcomer or doesn't really. I mean,
Yeah.
it's just completely diluted because 60K is good prices, and we're trading at like nice. I obviously could go higher. Would be nice if it went higher, but like I don't think anyone that has been in crypto for more than like a year can really complain about these prices.
Like you can't be super underwater from a investment perspective, right? On
Yeah, unless you've
BTC.
been trading.
Yeah, exactly. It's the traders' hell.
Yeah,
Sort of trying to leverage trade this type of thing or breakout trade it. That's where the real pain has been.
or with the altcoins.
Or with the altcoins, yeah.
Yeah,
Which time frames, given how slowly this is moving, do you think are most interesting? On Monday markets, for me, it was like the daily and the 4 hour, and there have
yeah,
been some really good moves and levels from those time frames, at least relatively speaking. I think the weekly has received like a ton of attention because I think there was like almost disproportionate excitement at the weekly breakout
higher.
in one form or another,
Yeah,
and then disproportionate doomerism on the full pullback week that followed. So I mean,
yeah,
that's kind of classic stuff, and it speaks to one of the things we spoke about with, even if you don't think it's a market structure break or whatever, just like breakout attempts from levels, it either moves quickly, and if it doesn't move quickly, especially on a weekly time frame, if you're playing the whole, oh, maybe it's a higher low and gradual shift in market structure, that shit can take more than 1 week to fully play out.
yeah,
I think the base. Do you remember that decision tree we spoke about, where it either moves quickly and you have to play it pretty close to the weekly close, or you have to do the weekly higher low pullback shit, which takes longer. I feel like the second one just basically got lost in the wind, and it was a story of, okay, well, we've broken back above whatever 64, 65. This is when we go to 80, diagonal trend line break, etc., etc. But that conviction's certainly been tested. You tweeted a weekly chart not soon, sorry, not long after the breakout attempt, and we're saying, why the fuck are people panicking? What has changed, if anything, on the weekly for you? Are we still in Don safe cluster territory, or is it were
yeah.
were you bricking it a little bit around
No,
60?
no. I'm actually surprised how bad people perceive this move to be. Because like look at the weekly time frame. We had 3 weekly candles that are green in
Yes.
a market that's super illiquid, like super just choppy generally. And then we had like that red candle is tiny in comparison to one where we come from, and two just generally in the last like 6 to 9 months. Like that is not a weekly candle that should spark any fears, in my opinion. And it's into support as well. So yeah, I don't understand why people are panicking so much.
Is 61 the
Um,
support you're mentioning, by the way? The bottom of the
yes,
cluster? Or
the
is it
bottom
something
of the
else?
cluster is 61, and then
Yeah,
the top of the cluster is 64.
got it.
But to me, that entire thing is just support. And if you start losing that meaningfully, as in like if you close at 60K, I still think like it's probably just chop. But if you lose it meaningfully, as in like 59 or 58K, then I start like understanding where people are coming from, because then it feels like it was just a bunch of higher high guys getting baited, and that's obviously not that great. But right now, it just feels like the market moved up. A bunch of people got way too excited about it making I mean, I don't know if I even want to call it a higher high, but like making that perceived higher high and then getting on leverage and then just getting wiped the next week. Like, doesn't really seem out of the ordinary in a PvP market, like we have had. Like, a bunch of people have unreasonable expectations. It's the same with like with Trump, right? Do you remember the whole Trump thing where it was like Trump is going to speak about crypto and it's going to make us all moon? Like, that's obviously such a bullshit narrative, right? And in a market that's PvP, that's the best excuse, like, for price to go up short term and then nuke down after, just by wiping all of those delusional idiots. And I think we're kind of in the same situation where, technically speaking, makes a lot of sense that all of those delusional idiots that bought the higher high get like a little bit of pain. But right now, I don't even see how this is anything like too significant. Like, even if you bought the higher high, like, you have to have been on quite high leverage to be stopped out already, even if you bought the Pico top before. So I don't know. It doesn't really seem that bad on the weekly time frame. It can turn bad, obviously, but right now, I'm just not seeing it.
Yeah, I think the weekly is one of the more interesting time frames. The daily and the 4 hour, I think, capture a lot of that type of stuff. One interesting question is, where do the slightly more reasonable higher low people get invalidated, right? Because like
Yeah.
there's a lot of higher high breakout traders that have clearly had a rough time with this type of thing. But there is the second half of that decision tree. I don't know what you think about this, because the level looks kind of shitty on the weekly. But in terms of percentage pullback, it's not the worst thing in the world. It's that really ugly, long wick looking cluster at like 58,
Yeah.
essentially 58.1, 58.7. And if you look at from a close perspective, at least from the September 2nd, the lowest weekly close, all the way to the top of this run up, you're kind of, your eyeball market structure, 60 to 70% pullback type of thing.
Yeah.
That more or less lands 58, 59-ish. And I think that's, for the higher low thesis at least, I think that's a reasonable invalidation to have. And a decent level overall. Do you give any weight to that, or is that too ugly
Yeah.
on the weekly time
No,
frame to
no, I
engage with?
like it. I like it. I think generally, like, we start losing that, it starts looking significantly worse, and then we can start talking about the market actually showing its hand rather than just shopping, which
Yeah.
we've been having.
Okay, so weekly commentary wise, 3 weeks up, 1 week washout on the breakout isn't the end of the world. For market structure arguments to become like unanimously bad, sub 58k, you'd get a lot of weekly time frame alignment. But
Yeah.
at that point, then Don, it's the bottom of the range, then you still have to buy it.
Yeah, and you still are at monthly support. So, like,
Yes.
that's why it's kind of like it's tough trading right now, I think, just generally. Like, I talked about this on my Wednesday stream, because someone in my chat was like, hey, I've been getting absolutely fucked. Do I just suck at this? And I'm like, if I was actively, and this is a skill to have, right? If I was actively like non-stop trading this, I'd probably lose money too. Like, this is just really hard market conditions, I think, right now, where it's like you have to basically read the whole thing right, and you have to know that it's chop. But then if you're wrong and it's not, you get completely run over too, right? Like, I think right now the market conditions are just really hard to trade, unless you've just been basically doubting everything, which has worked, but will obviously not work forever. And I said this in the Wednesday stream, like, there's a good chance that like, anyone that's been actively nonstop trading this has just, like, overall, just people have been losing money. I think even if you're decently good at trading, this is not necessarily the market conditions that you want to be doing it in. Unless you're a chop trader, right? And there's differences in what kind of types of market moves you like to trade. I can just recommend the only real good market to trade in crypto is the up only market, right? Where you just, like, you buy and then you're up like 100% the next 3 days. Like, if you can avoid all the chop in between and just get those big moves, you're gonna do better than all the other traders combined, with much less stress. It's just hard to find those moments. But like, for example, in our case right now, like if we move above 70K, there's probably gonna be a time where you're gonna get a really clean move from 70 to 80 at least, or from 70 to 90K, which would be one of these, right? Whereas like everyone's been trading the range and they've been kind of fighting for 1 or 2% moves here and there, and that's gonna be a bigger move that's quite telegraphed if we actually do get it. And if we don't, obviously, you've not been losing money anyway, so you can just pick your battles lower down, which like that kind of trading I think is actually achievable for everyone, even for people like me that are just like low IQ. Whereas the other types of trading, you actually have to have a little bit of a brain. This is why I'm like, trading is not like, this is why I always say trading is not for everyone, in my opinion. Like only a small subset of people can actually actively day trade and make money. Most people will just either get lucky for a while and then lose it all, or just never get lucky and lose it all. And then there's like a handful of people, like a handful of giga chats that just sit there and just make money day to day. But I don't think that's less than 1% of the population. And therefore, you have to, like, when you're not a giga chat, giga brain, you have to look for ways where it's actually just quite simple. And I think those kind of like big levels, big high time frame, obvious kind of areas of interest, those are the ones, right? Like 70K right now seems pretty damn straightforward. If we go down and if everything goes to shit, 43K as a support, like the weekly support, if you get to buy that level, I think there's like a very, very, very high chance that you're going to make money on it, regardless of whether we make new highs or not. Like if you get to buy 43, I think there's a really, really good chance that you're going to get to sell at least 52. And that's like guaranteed, like almost guaranteed move, as close as you can get to it. And those kind of things, I think the non-giga brains should look for. And that's kind of what I look for in the market as well, because I'm not a giga brain, in my opinion. So
yeah, I mean, one filter you can use to arrive at those types of spots, just from a brain dead charting perspective, is space, right? Like you want to do business where there's a lot of space between your entry and the next level, or between the support and the next resistance, etc., etc. And if there isn't a ton of space, then I mean, more likely than not, the market's either quite choppy or sideways or clustered in like a dodgy area. And that's what all these big levels and big setups have in common, right? The 40s up to the next trouble area, the 70 breakout until made up resistance. There's always a shit ton of space. And that both means that the market can and is more likely to go further because there are fewer obstacles in the way. But also, I think more importantly, even means that you don't have to be as accurate with your entry if there's a shit ton of space. Like if the trade is say from 70 to 80 and it's high probability, it doesn't really matter if your entry is like 71 or 72 or 72.5, etc., etc. You get more breathing room. Whereas if you're in a tight range and you're off by 1 or 2%, that's like half the fucking move done at that point. And the amount of edge you lose in relative terms is much higher, essentially.
Yeah. I mean, if you think about it in decent terms, basically, if you have to use leverage to make money, you're probably trading the wrong spot. Like, straight up, like, if you buy 43 and you sell 53 or whatever, you don't have to use leverage to make money there, right? But if you're buying, like, if you're looking at the levels in the very low time frame levels, or like just generally, even on the weekly time frame, we don't really have much space between like 64 and 69, right? Like there's not that much space. And then you technically, if you actually want to make something on that move, you would have to use leverage, because otherwise it's just like a 5, 6, 7, 8% move, which is small for crypto.
Yes.
And then,
or you use altcoins, though. They have built-in leverage. Have you heard about that?
Yeah. I mean, also, I think the altcoin trading gets a bad rep from some people, and a way too good rep from other people. Like it's such an extreme, right? Like people like, you have to be in the trenches, and you really don't. Or people are like, you really cannot touch any of this, otherwise you're going to lose money. And it's also not true, right? Like it's quite funny when you think about it, that the altcoin kind of opinions are always so like polarized, and I think neither of them really get to the point of it. Whereas like you just have like a very small window where altcoin trading is just stupidly profitable and stupidly easy. And all the other times you really shouldn't be having any. So it's like it's both.
The radical centrist returns to the show, Don. We've missed you. Both sides are bad. Both
It's
independent.
Oh, it's funny because like that doesn't really exist in Europe, you know. Like it's just an American thing where people like have the two sides and then independent, and no one really wants to vote for that because it's a thrown away vote. I think the general like the American voting system needs an overhaul, but don't take that from me.
I'm looking forward to the US changing their electoral system based on what Europeans think about it. That'd be a very American thing to do.
Oh, that'd be great. Yeah.
I love feedback on that type of stuff. I can also, you know, the earlier point you made about trading every single day versus picking spots. Again, from just like a breakout data metrics perspective, that's like categorically true, because straight up the best traders, they do not trade every day, just by definition. And I again see all of this data, and those guys just straight up pick their spots, and it's usually like one trade and one instrument type of thing, you know, like the old meme about you have to be like super selective, or the cringe version of being a sniper, etc., etc. In like a lot of cases, especially in these conditions and discretionary crypto trading in general, that's just true. That's just how it works. There isn't like, okay, time to wake up and go through the watch list and have my 5-minute moving average and I'm going to take fucking 50 trades today, that type of thing. I mean, it can work if the conditions are super favorable, but even then, that's like a realistically like a 3 to 4 month period where you're just slamming the market every day with the same setup over and over before it stops working. But it's not this thing where,
bullish,
yeah, exactly. But especially in these conditions, it's not like you wake up and there are 50 good opportunities, you need to be around for all of them. I remember our conversations in like 2017 where literally being asleep costs you money.
Oh yeah, I mean, I slept 1 in 3 days.
Yeah.
I still remember.
Like in the most literal sense, being asleep costs you money. Like you'd see a coin, you're like, okay, this looks decent. You take a nap, and it's up what, like 500% or something.
Yeah,
like
infinite.
Yeah.
And then you get the next opportunity, and you're up like 300%. But then if you took that 500% from the earlier coin when you were sleeping, you would have had like so much more because it compounds so fast. I mean, that's basically where like my money came from back then. Like I started with 50 euros, like all the way back, and then I mean, like that compounded all the way up because basically the market was so dumb that you just kind of compounded everything up. So like in 2014 started with 50 and then like pushed it up a little bit in multiples, quite a bit, but just generally. And then in 2017 it was just like one opportunity into the next, into the next, into the next, and everything just like 5x's, 10x's every other day. And yeah, he was just not sleeping. I had my bed in front of the computer. I remember I moved it in front of the computer so I could like lie on the bed and kind of like rest in between stuff. Fucking mentally ill.
You aged yourself so much doing that shit, but
oh yeah, I mean my hair is great for a reason.
Yeah, but now you can do all the Brian Johnson anti-aging stuff, you know.
Yeah, I don't even know if that works, honestly. The guy looks ancient.
He looks like a fucking zombie.
Yeah,
but his health markers are good, so that's what matters, right?
Yeah, it's all about the stats.
Speaking of health markers, on the daily time frame, this is one of the cleaner ones, and that's saying a lot given market conditions. The levels I had for Monday markets were the weekly open, which at the time was relevant, sort of 65.6. And the argument with the time, because we started dumping just straight up on Monday, right? And we've seen quite a, not a strong trend, but there've certainly been setups throughout this consolidation where the Monday move just gets faded early in the week, right?
Yeah.
So that's why that is there. I was like, look, if this is going to reverse aggressively, you don't need to try to knife catch mid 60s or whatever. You can just like take a punt around the weekly open, tight in validation. You hope it trends, and if it doesn't, you just cut it and do business elsewhere. That obviously didn't happen because the market just went down. So that was never a valid trigger. And then the levels after that, I think at the time the show was being recorded, we were trading below the 64K daily breakout level. That's just the highest close from August, like just basically the market structure level just on the daily time frame. And at the time, the argument was that, hey, this kind of looks like a medium-term daily time frame failed breakout. So if if you're gonna take the weekly open idea, or if you just want like a strength type of idea, you want the weekly breakout to fail, sort of failed breakout failure, because of that whole technical roundup classic that double fake outs are rare. So now that we've had the 64k fake out, if it gets back above there, that's a better signal than the first time round, essentially. And then the other level was 61.6, which is essentially that. I mean, it's a similar type of logic, actually, right? It was the former range high. We've had one fake out through it. On this occasion, it was quite interesting. We dumped through it, but didn't go anywhere. And now we're back above it. And there were also some wicks that I highlighted at 62.3-ish, saying, look, there's a daily level at 61.6. There are some wicks below that. That's kind of an interesting area to do business. And, we dumped through it at first, didn't go anywhere. Now we're back above. And the only other thing I have on my daily time frame is the weekly high or low question mark level we discussed, which is down at like 58.1, 58.6. So at the moment, it looks like 61.6 is being flipped, which isn't terrible news, right? I mean, that's sort of making it so the break through it didn't lead anywhere, and we're back above, which is nice. There's always a risk of a particular tea leaf reading given sort of weekend price action, whatever. But I'm wondering what you think of this daily time frame, if anything. Are those levels dog shit? Do you give any weight to 64.1 as a breakout? Do you give any weight to 61.6 as a decent support resistance level? What have you got on this time frame that's slightly faster moving than the fucking quarterly that you shared on Twitter?
I do have 61.6 as well. It's weekend price action, so it's not really to be trusted, I think, but it's the best level we got. So I think that's like on the daily time frame. That's at least something in the bull camp, right? Where like it flipped the level. Just generally, like you can make a really good bullish argument here, I think, where you have like the monthly time frame at support, the weekly time frame is kind of like the stuff we talked about earlier with the like wiping out the leverage apes, the breakout apes, but still being at support, and now the daily reclaiming that 61.6 level. The only reason why I'm a little bit cautious is because we had that breakout above the 61.6 level on a weekend, like on Friday. And it was also not that significant, as in it wasn't really strong, right? Like we just kind of had like like filled in the candle from Wednesday and didn't really do too much. So like in typical kind of crypto fashion, you always have to have like a few good arguments for something, and then obviously a few bad ones. Like the breakout being like this week and it being a weekend is like a negative argument for going up, and then you have all the other arguments are basically bullish, where you had weekly support, you had monthly support, you wiped out the apes and all that kind of stuff. So you have to pick and choose basically. Problem is like buying into the weekend pump has historically been not that great. But this is as close to invalidation as you can get. So like, what do? You basically like put in a hard situation to kind of trade this thing, because you either buy into weekend pump or you just let the setup pass. I don't necessarily know what I would do.
Dude, I mean, there's a simple answer here. You're making it seem complicated. It depends entirely on your bias. If you're bullish, it's front-running institutional ETF flow doing business on a weekend. And if you're bearish, then it's a fucking scam pump and the close isn't real.
I mean, fair enough, yeah.
There's also a lot of discussion, by the way, of this bottoming structure on the 4-hour, where it had like, the 3-drive wick, whatever type of shit. TA type of thing.
Oh yeah.
Do you give any weight to that? Do you think that's compelling enough for a bottom? Do you care about this structure that looks like this essentially, or is that a red herring, as we say?
I mean, I like that pattern. We get it quite a bit on like bottoming kind of moves. The problem is right now, I think the market's been so choppy that I don't even like low time frame. There's setups in the 4-hour, but like for like transforming into bigger time frame moves, like I don't really trust it too much. But yeah, I mean the 4-hour chart doesn't look that bad to me. Depending on how the next 4-hour candle closes, obviously.
let's just keep recording then, so we can give the most up to date analysis.
But yeah, like I mean, it's a little bit of bull confidence, but like I said, it's into the weekend, so I don't really trust anything anyway.
You said, I think you used the word transformative, right? Are there any levels or closes where you'd be like, okay, a lot of this ambiguity has been lifted, weekend or not weekend, which level, etc. But then now it's clear. Is there any spot like that where you think the stars do more aligning than they do disagreeing with each other?
I mean, it starts looking really, really good above 65.2 or 3, like basically
Okay.
making a new high. But
Fine.
just because that's kind of like a midpoint-ish of the range. Like I know
Sure,
like
sure.
there's a few midpoints you can draw here. But yeah, above 65, I think.
So here's what's going to happen, Don. I'm going to take your explicit financial advice and break out by 65.2, and then I'm going to get liquidated. And on your next show, you're going to say, hey, it's actually fine. We're at monthly support, and all the breakout apes got liquidated. And I'll say, the only reason I'm a fucking breakout ape is because you told me to be one. It was supposed to be a transformative level, you
No, no,
scamming
no, no.
German.
I told you to buy 58, so
Okay.
I'm not gonna take it.
Told me to buy. What if it never reaches 58, Don? Then I can never make
No,
money in
no,
this
no.
market ever again.
I'm saying in hindsight, I told you 58.
Oh, yeah,
But you
yeah.
should have bought it. You should have bought it a couple of weeks ago
Should
at
have bought more
58.
at 3K.
I mean, you should have. Dude, the funniest thing when people because people I mean, I really don't care. Like there was a period of time, like a couple of weeks, where I was like starting to get pissed off, but now I really don't care what people write on Twitter anymore. But there's this comment where people are like, "Oh, dude, you sold it like 40K. Now it's at 60. Are you coping? Like, you should shut the fuck up." And I'm like, dude, I bought Bitcoin at like 1,000 and I sold it at 20K or like 17 back then. And I mean, now it's trading at 60. Was that a dumb sell? Right? Like people are so delusional in
Yes.
regards to trading. Like,
Should have just
so
held
funny.
Don, fucking idiot.
I mean, I sold ETH multiple times at like 150 and now it's trading at like 2,400. Do I regret those sales or not? Like,
Yes.
I mean,
Any more
there's
questions?
like, I mean, it's like there's so many more trades that came after it, right? Where it's like it really doesn't matter, but people kind of just don't understand, which is fair enough. I think people should be thinking more like that than they should be thinking about trading. They're probably better off if people just were like, "Oh, I had Bitcoin at like 10K. I have that really good entry. I'm never going to sell." I think they're probably going to be better off. And the reason is just straight up humans are gambling addicts deep down, and you have to kind of control it. And I think the more you trade, right? And I think this is, unless you make it super professional, this is the case. Like the more you trade, the more kind of at danger you are at just slipping into the whole trading addiction thing, which can just wipe you out completely. Whereas an investor doesn't really have that problem, right? I think just generally, like where traders trip up is basically on the way to becoming like a professional trader. They kind of delude themselves into thinking that gambling, like just like straight up gambling, not professional gambling, not having an edge, but just gambling is something that they should be doing, right? Like I think on the way to becoming like a professional trader, I think that's where people slip up the most, where they just do like a bunch of gambling shit and then they wonder why it's not working. And I think the more you trade, the more at risk of that you become, until you actually just manage to get over that and just keep the demons at bay, basically. But I think that's basically what most people are struggling with, because it's so easy. Like getting humans generally addicted to anything is so easy. And I think that's one of the biggest pitfalls.
Well, yeah, I think you can ask yourself, and it applies to the audience as well, like a very simple question, which is, do I treat trading like a business? If the answer is no, then you're much closer to gambling than you are to trading, right? And by a business,
Yeah.
I mean, do you have like, just like you would a normal business, do you have like a business outline? Do you have a business plan? Do you know your costs? All that type of stuff. Most people don't, right? They're just like logging on and punting. And there's nothing
Yep.
wrong with logging on and punting, but you should be very clear as to what that means and, the lifetime expectancy of that approach and the trade-offs and so on and so forth. I just think like we take the term crypto trading and assume sort of just as a matter of language that anyone who does crypto trading is a crypto trader. It's like no, gamblers are using crypto trading. That's
Yeah.
I think like much more accurate, because like trading in itself, in the purest sense, is actually like very boring and monotonous. It's like a lot of research, a lot of testing. It's mostly waiting. Lots of record keeping and journaling and review and all of that shit. You need to know your break even costs and the expectancies of your strategies, and you need a plan, a system, an outline, and you iterate and reiterate on that type of stuff. That doesn't apply to like what 99% of people.
Yeah, because it's not fun.
It's not fun, but fucking just cranking up the leverage and buying a breakout is a lot of fun until it goes wrong. That part is less fun. But then you buy your own liquidation. So there's always a way to make it fun, Don, as you're well aware.
Oh yeah, and I think just generally like, and then people are going to be like, yeah, but I'm making money, so like, and I mean this applies to us as well, right? In a way, because you could always take it more serious, and I think this is one thing that I am guilty of as well, where I just could spend so much more time taking it serious, but I'm just like, I found kind of my niche, and that's okay with me. But those kind of businesses die out eventually, right? Like the businesses that don't innovate and the businesses that don't really try to kind of get better, they usually die out at some point. It's just for me, I protect myself by just pulling money out of the market over time. And then I'm like, if the edge that I have, which is basically just that I don't really get stupid at highs and that I do see the opportunity at lows, right? Like that's kind of like all the edge I have, where I'm like, this thing nukes, and in my head, a switch flips, and I'm like, I mean, this is just a good opportunity, right? Like I'm like, oh, this like crypto's always been great, and then when it goes too high, I'm like, nah, this is kind of fraudulent. Like this is a fraudulent market. Like that's the biggest. I think that's one of the major edges that I have, that my mind kind of works like that. But that kind of that will not really sustain, like, I think long term, right? But I'm also okay with that, because I'm like, I don't need to do this for the next 60, 70, 80 years. I can be fine with just doing it until it stops working. But so I do kind of fall on this as well, where I could just do more. But instead I'm like punting, but I do punt at areas that I have prior, like that I know are important, and where I'm not just like, I wake up and like, okay, this is just whatever. I'm just gonna punt. And so we kind of internalize a lot of this stuff over time, right? With experience, where it's like, you would have to technically have all of this written down, but you kind of just can tell. But that could also just be a cope way of just, kind of like explaining your gambling addiction, right?
Yeah, like I'm experienced, bro. I've been to the casino 500 times in the last year.
Yeah,
no, but I think the discretion has to be earned, right? That's another kind of recurring theme in this show, is that there's nothing really wrong per se with discretionary trading and not having like a strict entry checklist and a system and writing shit down and a journal. But you have to have a good, or at least a justifiable reason for not engaging with the market in such systematic terms. And I think one of the only ways, if not the only way to do that, is just via proof of experience. And even that, as you mentioned, isn't perfect, because what if you just got fooled by randomness, right? It's just complete noise.
You never know.
Yeah, you just can't know. And you just like random walk Brownian bullshit, and you've just psyoped yourself into believing that you've crossed some magical threshold or chasm where now you don't need to write shit down, just fucking wake up and do whatever. Whereas in reality, you just kind of got lucky a bunch and whatever, have good risk management. But I mean, both of it, I don't think it's a coincidence that both of us, I'm not fucking comparing myself to you, but nonetheless, both of us went through phases where we were way more systematic, way more discretionary, way more, introspective and organized, etc. I think at least you have to pay your dues doing that type of thing before you can consider the luxury of discretion versus just jumping straight to it, because it's kind of dumb and boring, and it doesn't feel like trading if you're there writing shit down, right?
Yeah, and I think the big risk of going the discretionary route is like, even if you're profitable for a while, right? If that stops, it's really hard to pinpoint why, unless you have a really good feel for it too, right? Like, and it's kind of like the thing where, like you said, you have to kind of earn it, because then you also have to earn basically being able to self-criticize and kind of figure out what the problem is. And all of that takes experience, and honestly takes some humility in a way. A lot of traders like are super loud on Twitter or whatever, But something that you will see, like a bunch of people that are like trading really well over a long period of time, is like they talk shit, but then when they're wrong, like you will see them just be like, oh fuck, I was wrong, like whatever. And then you see the terrible traders, right? And I don't want to shit talk anyone in particular, but like people like Capo, for example, right? Where there's never like oh, I'm wrong here, or like I was wrong. It just doesn't really happen, right? And I think
I
that's a
don't know,
big
bro.
difference there.
Italian GCR has been on a fucking killer streak recently. I don't know if you've noticed.
Has he?
Yeah.
I'm not actually following him that much,
Don't talk
but
shit about my goat.
no, but this is just kind of like the differences in attitude, right? Where people are like, they have to be right, like just because they need to be right. Like this is a need for being right. And then there's like the people that are like, um, obviously they want to be right, but when they're not, they can also deal with it. And there's a big difference there too. And then you have to like all of this stuff is really really hard to kind of monitor yourself in if you're not systematic, at least at the start. And then you kind of know how you act and what you're weak at and what you're strong at, and then you can go the more discretionary route. But you're always at risk of just falling in the, okay, I'm just gambling here, right? And it's not that easy to kind of pinpoint that whole back and forth.
Yeah, it's almost like an unfalsifiable claim.
Yep.
But also, I think, as controversial as this may sound on its face, I think it's true. Most people don't make money trading crypto, as even out of the people who make money overall, if that makes sense. They're not really like crypto traders per se. It's not like a trading approach. Most of it is just like a big gamble that pays off and massively increases their bankroll. And then from there, they start being more conservative. Like, oh, I'm going to like trade spot, or I'm going to do VC deals and KOL stuff or influencer stuff or whatever else. I think
Yeah.
the number of people who just straight up make a consistent living day in, day out, discretionary, long, short punting crypto, it's like a very fucking small number.
Yes.
The vast majority of even profitable traders, that there are like a few trades, a few coins, a few trends that are disproportionately responsible for their lifetime P&L, and everything else is just kind of noise and churn. And there isn't any semblance of like a system or long-term edge there type of thing. Most of it is right place, right time, and the variance working in their favor versus the standard distribution where someone gambles and loses.
Yeah, but I think that's honestly like just straight up, that is like one of the best ways to play the market. Like, I mean, obviously
Oh, for
depends.
sure.
Like, if you're just like, oh yeah, I just need to get lucky once with leverage, that like that's not what I'm talking about. But like, there's gonna be like a couple opportunities in the market that you need to take advantage of, right? And they're gonna kind of just propel you forward massively. We had the luxury in 2017 where those were like literally daily, right? Like you would be able to just kind of go from one thing to the next. And it was very, to me at least at the time, very obvious where you needed to be. I think it's a little bit more difficult now. But back then it was just kind of like you just needed to be in the right spot in the right time. And the right time was pretty much always just needed to be fast enough. And then that's going to propel you forward. And then you basically have a bunch of churn while you try looking for the next opportunity, right? And that one's going to push you forward again while you then wait for the next opportunity. And it just kind of like you keep on like just going back and forth and nothing happens until something big happens. I
Yes.
think that's one of the better ways to kind of look at the market. Rather than trying like the day-to-day making money thing that you see on YouTube and whatever from like trading influencers that sell courses, I think is, I mean, I this is why I keep saying like maybe I'm just not gigabrain enough, but I don't think I could do it. Like I don't think and I've been doing this market for like 10 years now, right? And I don't think I could sit here and claim that I just trade 24/7, and every day I return this and that
Yes.
percentage. Impossible for me. Like I'd lose all my money if
Well, I
I
mean, the amount
tried.
of hubris involved in that claim is extraordinary, isn't it?
Yeah,
It's basically asserting that you have an edge over the market at all times, by definition. And the probability of that claim being true, I think, is pretty miserable. I mean, in my case, I can think back of, I mean, that exact same analogy of a few instances where shit just broke or trades that were disproportionately responsible for large amounts of P&L. And that's very rare, the day-to-day churn stuff, you know? Like, oh, buying hourly support, buying and selling hourly resistance. Like, I made a lot more money buying 4.8K BTC
Yeah.
than whatever kind of shitty day trade, mid-range to range low type of stuff would ever make, right? Same with the 6K reclaim, the all-time high breakout, the nuke from 60 to 30, the 30K bounce, Solana, like all of that type of shit. It's a relatively short list in like a 7-year trading career. But that's, I think, where people get distracted. They feel the need to like make money right now, make money every day, rather than being comfortable not making money or being churn, whatever, break even for sometimes quite long periods of time. And then when you get those types of opportunities, you size the fuck up. And if you do that appropriately and you manage it appropriately, it like eclipses any gains you would have made from your like range high, mid range, 1 hour trend line breakout type of shit.
Yeah.
But it's almost like a marshmallow test, right? Like, do you want N amount of money now from this day trade or 10N amount of money, but you have to wait like a little bit longer? Type of thing. And that's just like a very hard thing to do. The problem is these two things aren't independent of each other. Like, if you're trading a lot of like high frequency, low to medium time frame noise, the likelihood that you'll be able to correctly execute and hold like one of those giga events, which is a technical term, I think it goes down the more you do that. Like, if you're always in short-term trading, sort of level to level, day trading, range, whatever mentality, and then you get one of those like big wipeout opportunities, big breakouts, trending moves, I think you're worse equipped to make the most of that than if you didn't spend that much time doing the short-term trading. So like there is a cost to engaging with the market on those terms, because I think it sort of dilutes your ability to take big swings if you're always going for smaller hits. Although I don't know if that baseball analogy makes any sense. They've never fucking played baseball in my life.
Yeah, no, but I 100% agree. And I think and then people might ask like, hey, why should I be trading like the low time frame stuff in the first place then? And I think that's a valid question, and you really don't have to. But if you do, right? Like, and I mean, I like if I see something interesting on like the daily or whatever, you'll see me trade it from time to time as well. And the reason why is just because if you don't do anything for too long, you kind of get like this just paralysis, right? Where you're just like, I haven't done anything in so long, I just don't know what to do, basically.
I can confirm.
and then it's really hard to get back into it. So like there's this, and this is just trading, right? Like where it's, and you will hear me say this a lot, where it's like there's a bunch of positives and a bunch of negatives, right? Like when you do things, and you kind of do have to keep your hand on the pulse and kind of like be like active somewhat in the market. Otherwise you will just never do anything. But you also, if you do it too much, you will get lost, and then like in the market itself, and then you'll just basically miss the tree. In what's the saying? Miss the tree in front of the forest.
Forest for the trees, I think.
Yeah, forest for the trees. Yeah,
it's not trees for the forest, is it? That doesn't make any sense.
No, that does make no sense at all.
Great.
Yeah, because then you're just gonna be like looking at too much low time frame, too much of insignificant noise, basically. So you kind of have to always. I think this is why, like, maybe this is why, like, the centrist in me, right? Like that I have this obsession with being in the center somewhere, helps me in trading, where I'm like, I mean, trading always kicks you in the nuts, basically, and you just kind of have to see which way you get kicked in the nuts least, and it's usually somewhere in the middle. And that's just kind of how you go.
Yeah, I also, like, from the audience point of view, appreciate that this might be a tiresome philosophical bullshit, tell me if the market's going to go up or go down type of section, but this isn't purely speculative or theory. Like, Bitmex PTSD is a real medically diagnosed condition. And just to elaborate on what that means for those of you who don't know, I mean, we leverage trading really sort of entered the mainstream, I would argue, end of 2017, early 2018?
Yeah, 2018,
as far as like, 2018, where the thing to do was to go trade on leverage. It was around before that, obviously, but we were just like punting altcoins on Bittrex and Polo in 2017 and doing ICOs for the most part. That's what the market was. And then once those opportunities, the easy money disappeared, leverage came in to fill that gap. So there's a whole generation of traders, which is our generation, our class of 2017 type of meme, who essentially grew up trading on Bitmex, where the market was just like mega predatory, zero trend, low volatility, low liquidity, mean reverting piece of shit. And that lasted for, 2 years at least.
Yeah.
And it's very hard to not build any habits if a market trades more or less the same way or has these recurring patterns for 2 years. And the cost of participating so actively in that BitMEX meta was that when the market actually started trending again, the class of 2017 was like notoriously fucking terrible at trading the trending moves and adapting to new market regimes. Because those patterns of every breakout being fake, the idea of every green candle being a BART, like you see one impulsive move, okay, it's time, it's full retrace time, like all of that type of shit, it actively hurts you if there's a significant regime change and the market starts trending. So the class of 2017, you'd think, oh, well, 2020, 2021, post-COVID, whatever, was so easy because everything just went up. Well, that was like a literal nightmare, an untradeable nightmare for a lot of 2017 traders, because at that point you become so rusty and so desensitized to like actual trending markets, and your impulse and muscle memory would be to like sell breakouts essentially and always target mean reversions and never hold moves for more than like a day or two, all of which ended up being antithetical to 2021 price action and bullish crypto price action in general. And if there's anything, it's hard to fathom anything worse than trading in such a way that means you can't trade crypto well when it starts trending upwards. That seems like a very expensive condition to have.
That's the only point.
That's the whole fucking point, right? You've essentially disarmed yourself and have neutered yourself from participating in the best available / highest EV, easiest money market conditions. So that's just to add some real world context to this like philosophical trading psychology bullshit we were speaking about for the last 20 minutes. It's these aren't just plain words. That there is real experience here and real costs to ingraining trading habits that may. Look, people who traded 21 terribly, that like missing out on those market conditions is really fucking expensive. Like this is a very real thing. This is not speculation. That there's really strong historical precedent for this as far as the costs of ingraining habits that are antithetical to strong crypto trading environments, or your ability to hold a trade, your ability to trend trade, and so on and so forth.
Yeah, well said.
ETH.
Yep. Such a piece of shit.
Is Ethereum going to go up?
Never, dude.
Okay,
never.
cool. Solana. ETH BTC first and foremost.
It looks like a piece of shit on the low time frames.
Do you have quarterly cope for this one, Don, or is not quite there yet?
My cope was actually like when you throw on the quarterly on ETH BTC. I haven't even looked at that, but that's.
It's a bit lower on the quarterly, no?
Yeah, it needs to go a little bit lower.
0.35 at the earliest, 0.33.
Yeah, not great, but that's just how it is. But actually, I like it. Maybe it needs to go down there.
Your cope was on the monthly, as far as I recall, more.
Yeah, that is still right where it was.
Okay.
Like nothing's really changed on ETH BTC.
Not on the ETH BTC front. What about ETH USD? We talked about we discussed the monthly time frame, which wasn't terrible, 2200. I don't like the monthly chart for ETH in general, but if you had to pick one level, I think it'd have to be this one.
Yeah, 22 is great. Yeah.
22, and that's where the weekly bounces have been coming from as well. Yep. So I guess that's still in force. And then the other big one was I think you were very adamant about this, like the clearest level where you for once you're rationally justified in giving this thing a chance is 3K plus or 2.9, whatever. Are there any other timeframes or levels or setups that you think is relevant for this thing, or is this just like a fairly straightforward 2K, 3K, or nuke K if the bottom falls out on this thing?
I still think like the same thing that I said last Casual Friday, where I'm like 2.9 plus, like that's where you actually want to bet on this thing,
right?
But I think if this weekly closes above 2.5 ish. That would start looking better. Right now, it doesn't really look like it's going to, but like that would be like a decent look if we get a little bit of positive price action going into the weekend, and then close above 2.5 like that prior.
But Don, the weekend is a scam. You told me that like 40 minutes ago.
Yeah, basically the weekend is a scam. Like let's say we have good price action right now, right, on a Saturday or Sunday, and we close the weekly above 2.5. There's a good chance that it's gonna on Monday dump back down, but also gonna kind of like revert that Monday nuke on Tuesday or Wednesday. So basically, yes, the weekend is a scam for lower time frame price action, but for the higher time frame still matters.
Okay, so the weekend price action is a scam, but it sets up a Monday opening drive scam as well, and that's the
Exactly.
good
So
one
you
to
basically
trade.
you get doubly scammed.
You get doubly. I mean, it sounds like peak crypto, to be honest. I think
Yeah,
there is something there though. Like weekly, I've traded similar stuff before. Like weekly close pushed by a weekend, and then you fade the first move on the subsequent Monday if the close ended up in a good directional bias. That's
Yep.
not unfamiliar.
No, it's
I think it's the first
setup that
fucking
I take
useful
quite a
thing
bit.
we've said on this entire show.
Yeah, I mean, there's like something that I've kind of looked at for years and years now. Like you get these like favorable closes, and then you get like a weird move on Monday or whatever that wipes people out. I'm like, okay, like that's a better entry than I would have had if I just bought the close. Just generally more risk defined, and these kind of moves are usually oftentimes just bullshit. So you can fade it. So you get like a fake move on a fake in quotes move on the weekend, and then you get the reversal of that move on Monday to Tuesday, and then usually it goes the way the close indicated anyway. That's kind of how I look at it. Obviously, not the only way, not the only reason why I get into trades or not, but that can help make decisions.
Fantastic. Okay, where's 2.5 coming from, by the way? Is it the lowest close on the 5th of August candle?
2022.
Oh, Jesus. Oh, that one. Yeah. Sorry, I just remembered.
Yeah, 2.5.
I was like, how many fucking decades do I have to go back to find this level? I remember this one.
So above 20, above 25 would start looking much better. I would like it to hold that. It's fine if it's like 2475 or something, which we're very close to.
Okay.
Where it is right now, obviously not that great.
What if this is a lower high on the weekly, Don?
I mean, that's what I'm like a little bit worried about.
Right.
It's kind of looking slidey, right?
Slidey.
And that's also technical term.
That's a technical term, yeah, straight from the textbooks.
Where it's like you had this consolidation between like 3K and 5K, or like 4K, 3 and 4K, yeah. Above it, that we broke it down, and now we are kind of putting in consolidation. But if it starts making lower highs and all that kind of shit, it starts looking really bad. So that's kind of the worry here.
Right. Do you have a thermonuclear support level where you're like, oh god, fucking lower high, lower low, the wicks are being taken out, Armageddon type of shit?
I mean, if you buy 1.950, I think like our good old line. Remember that one?
1935 or whatever.
1935. We talked about it on the show.
I mean, to be fair, I've been waiting for a retest of that level since November 2023. So imagine you wait for like a level for like a year, and then as soon as you get filled, you get stopped on the same candle.
I mean, very possible on those kind of trades. Yeah.
Oh my god, that's happened to me before in high time frames. Not a year necessarily, but I'm like, oh, it's finally back here. You know, it's time to do business, and this fucking gets stopped out on the same candle. And I'm like, TA is a piece of shit. Should have just been buying on the way up.
I mean, that's kind of the thing, right? Like when you have a breakout, and oftentimes you don't want the retest, and I think like this is like a good example for it, where it's like that's a good support level, but like I mean, a lot of these levels you actually just don't want to be retested. That's why I would like it. Like if it goes above 2.5 now and like starts acting strong, I like it much better than if it goes to 1.9 for like 935 or whatever the level is. Just because that is a good level, but like, do you really want to completely erase the bull market gains that we got? Not necessarily. So it's kind of like it's a weird thing where yes, you get a good entry at a good level, but it also erased the entire bull market gains, which that would not be great.
Also, have you noticed there's zero talk about the entire ETH ETF narrative? And that's understandable, but that was like a pretty big bull thesis. And the issue is, it's a bull pieces, lol. I guess bulls are pieces for that thesis. But it was a thesis that was given multiple lives, I feel like, throughout the cycle. Because first it was used as an excuse to front run the BTC ETF.
Oh, that was so bad.
The ETH was going to get one. And then it was used as an excuse when BTC got one to be an argument for rotating to ETH. And then it shifted to, okay, well, when ETH is actually going to get one, even if it captures a percentage of the price performance of BTC or the number of flows or some combination, then it's going to go up. So like literally before, during, and post ETF, there were arguments for this being bullish, and like all of them have been wrong. Like, how many more opportunities does one thesis get to be invalidated or
I think
validated? But
people
now you
think
just don't hear a single peep about it anymore.
Yeah, I think people are like kind of like coming to terms with that it's invalidated. Where I think like with the ETF flows, like it takes a while, but I think that's actually gonna be quite like as long as the crypto market stays up and doesn't like fade into irrelevancy, which I mean any day now. But no, as long as that like stays around, I think the ETF flows are gonna be like that's gonna be an interesting narrative. But it's basically very quiet, which I think is really interesting, right? It's the one reason why I hold ETH, where I'm like, I think this should be a very loud narrative, but it isn't because people got so burned on it buying before that they just don't dare to talk about it or hold it anymore. But I find it interesting. So I think if the market turns around and actually starts playing bullish for once, uh, that's gonna become a main driver and it's gonna be interesting. But
It's gonna make a comeback again.
yeah. I mean, the narrative. I think people are literally so burnt they're not gonna dare to speak about it for a long time, even if
Sure,
it goes
yeah.
up.
I mean, it's been
Which is
like one
not
of
a
the
bad
most
thing.
costly decisions to make, right? Like
Oh
ETH
yeah, it's
rotation relative to BTC, relative to Sol. Oh my god.
yeah. But those are the only two really. Like if you look at other coins, right, besides the meme coins, like even if you went in ETH, because that's kind of like what you see everywhere, like
Sure.
the big ETH regret, right? But if you look at all the other altcoins, um, they've not really been doing better than ETH. If anything, they've been doing much worse than ETH. It's just like they're so bad that people are just like, oh, this is just at zero now, right? Like they kind of write it down as zero already, like the other altcoins that they've been holding. Whereas with ETH, it's not as bad yet, so they're kind of like at this pain point for longer. Where it's like it's still like if you bought a bunch of ETH, um, you've been losing money, but very, very slowly. So you kind of start like every day you look, every day it's worse. Whereas with the altcoins, it went really quickly, and then they're like, oh, I'm down 90% anyway. It doesn't really matter. No need to talk about it. With ETH, it's like yeah, you've been sitting there, you've been bleeding for years now, which is obviously not fun. And I think that's actually the worst, like for your psychological state, the rugging and then just sitting there at minus 90% is much easier than seeing it go down 1%, 2% every day.
Yeah, it's easier. It's easier to hold out hope essentially if you're not rugged quickly. Um, that said, Don, you stopped me from making generational wealth on PopCat by telling me it was a piece of shit scam when I begged you to let me buy it, given you control all of my financial decisions. So
I
now,
do not remember such a thing occurring.
so now that PopCat is an all-time high, when are you rotating into it?
Oh, I mean, I've rotated at the bottom, obviously. Nah,
I
I mean,
knew that wick was you.
no, I'm not really interested in memes. Like after my vacation, I'm just like I've transcended.
Oh
I
wow. Okay.
I already had no FOMO before, but now I don't even like I don't have FOMO, but I don't even give a fuck. Like before, I was like, oh, this is interesting. Now I'm just like, oh yeah, I mean, whatever.
What
So
is your relationship with altcoins at this point? Do you look at them? Do you chart them? Do you have alerts set? Do you trade any of them? Do you
um,
update your watch list? Do you look at the top performers, or is it just straight up I don't care? Apart from
I
Solana.
straight up don't care. I mean, even Solana, I don't really care too
Okay,
much.
great.
Like I straight up don't care, and I don't have setups, and I don't even update my watch list.
Fine.
Sometimes something comes up, and I'm like, I'm interested in trading this narrative. Like if it's an interesting one, but like the whole meme coin narrative, just not that interesting to me. I think it is still I mean, that's the place to trade, right?
Yes.
Which just makes me, given that I don't really care, like it's not what I want to do with my life. Like I just don't trade altcoins, and until we get a new narrative that is more interesting. And if we don't get it, if it's always meme coins, I just trade Bitcoin and ETH because like I really couldn't care less. Like the whole like I mean it's just not, and I mean I hate to say it, right? Because this is the most boomerish thing that I've
Right.
ever said, but it's just not serious enough. Like it's just stupid.
Yeah, that was gonna be
But
my next question, right? Like as a trader, what qualifies as interesting? Because in by standard metrics, the meme coin meta is interesting, right? Like
Oh yeah,
it's
yeah, yeah. As a trader, it's interesting.
yeah, it's incredibly volatile, and even the ones on centralized exchanges, which are considered like on the more boomer side versus the trenches, they still trade pretty well and get a lot of volume. There are good moves on them as well, and the liquidity is decent. So, is this like a intellectual high tower position that this, meme coins are for the serfs, and you're a knight or something?
No, I mean somewhat maybe.
Okay. So it's just like an
Not.
elitist pull the ladder up after you position.
No, not necessarily. I would say it's just basically I don't really I don't have the time in my day to care about something that's not gonna be around like in 10 years,
But
in
then
5
surely
years.
that applies to altcoins at all
Oh, I
time,
mean,
all altcoins at all times.
Bitcoin is gonna be around, ETH is gonna be around in 5 years, Solana is probably gonna be around in 5 years. And then the list gets very thin, right? But
Fine.
like basically I don't care enough for things that are gonna go to zero anyway. And I mean, people are gonna hate on this, but it's true, right? Any internet meme is just disappears at some point, right? And where it
No, it
goes in
doesn't.
between.
Troll face.
Yeah. I mean, some boomer somewhere is still posting that probably, but
Yeah, he's
you
also
know what I
falling
mean?
for like blatant AI slop.
Yeah, that's the thing. Like these memes, just they're short shelf life, and short shelf life could be like 5 years. But
Sure.
I, for me, there's other things in
But
my
you can
life that are
appreciate why that
prioritized
perspective
now.
is like insane to the average person, right? It's like, hey, this is like the entire crux of the cycle, and you're basically saying, nah, it's not that interesting because it's not going to be
I mean, yeah,
around.
I can just look at the next cycle then. People are just I mean, the time frames is just different, right? And I would behave and act differently if I didn't go through all of these cycles before,
Yes.
right?
Okay. Yeah.
I had the 2017 cycle, which I took fully, right? Like that was when I started being full-time crypto, and every single cycle since, um, and even before, I mean, I did the whole Dogecoin thing in 2014, right? I've and I'm not saying no one should do this, and people always kind of confuse the two and get angry at me for it. I'm not saying, hey, you should be trading meme coins. I'm just saying, me personally, I don't care about it. And then when they're too hot, and that's very easy to tell, right? When the meme coins are too hot, um, I might punt the short just because I know where these things are going, just generally. And this is just fun because the short is much quicker generally, and it aligns more with my long-term vision of where these things are going. And then I might take it, right? But just generally, don't care too much. Have done it enough. That doesn't mean people shouldn't do it. And I have been the whole the recent Pepe and With move, whatever. I said good things about the price action and where they were
You make it
when
sound
they
like
were
a
lower.
candidate endorsement in an election. Like I said good things about Pepe and Whiff. Look at them now; they're up in the polls.
They are up in the polls. But me, I just
Yeah.
and I'm just generally, to be fair, I'm not that interested in trading right now, other than positional trading anyway,
Yeah.
right? So you cannot really interest me in even trading Bitcoin or ETH right
Sure.
now, other than just a positional trade where I'm I want to have a position just to have a position. Um, so that might be part of it. Right
Yes.
now, trading is not that interesting to me. Just generally speaking, even if there's opportunities, I'm not really into it too much right now.
Yeah. Just to distinguish, like if someone's listening and this is their first cycle or second cycle, or they're in the aggressive kind of trading phase of their career, they should absolutely be looking at and trading meme coins, right? Like even just from a day trading perspective or week to week or whatever, because I mean, these are the hottest coins. They've got the best charts. They've got the best price action. They've got the best volatility. Both ways in many cases. They provide the
Yes.
most beta for the market as a whole. You can size up, generally slightly less efficient than BTC and ETH. Like if you're just approaching this from a robot trader perspective as to what stuff should flag up on my watch list, I mean, at least the centralized exchange meme coins would have to be up there, right?
Yeah. I think if you're gambling, you should definitely look at meme
Right.
coins. If you're trading and you're somewhat sophisticated, you should definitely look at meme coins. And if you're completely new to all of this, you should probably also look at meme
Yes,
coins.
yes, okay.
So because the meme coins are going to teach you a lot, right? As a new
Oh,
trader,
for sure.
like they're going to teach you how this market works by taking all your money, most likely. Like you got, like that's the thing,
At
right?
least they'll do it quickly. We had to sit through some long bleeds on
Yeah.
our altcoins.
No, like with the meme coins, it's just generally like oftentimes the people that come into the market new don't know what they're doing. They're gonna make money at the start with meme coins, and then they're gonna lose it all later down the line. And you learn so much by doing that, might as well, right? So I think like there's a lot of crypto participants that should look at it, just because of, like you said, the volatility and how it all trades,
Yeah.
and all the lessons you can take from it.
Well, it's both of those, right? It's opportunity plus learning experience. I think by
Yeah,
definition for those things, you should, for every cycle, say, where is, what's got the attention? Where is all the trading taking place?
yeah,
And that's what you should gravitate towards. I'm just trying to save your skin from like the obvious low-hanging criticism. Like, this is the most volatile sector, it's the most performing sector, the best performing sector, etc., etc. And you call yourself a trader, but you're saying you shouldn't trade it because that's not the point necessarily.
no, and I also don't say you shouldn't trade it. Like that's the whole thing that I'm saying. Like it's just I'm not,
Yes, yes, it's personal.
which people really don't understand for
Yeah,
some reason. Like there's a lot of like I don't do a lot of things, right? Like I don't go to church on the weekend. Doesn't mean I'm saying you really shouldn't go to
yes,
church. Like that, like I couldn't care less what you are doing. I'm just saying, like, hey, I'm not doing this. And like for some reason people take this as, and I mean, fair enough. Like if people are like, hey, this guy is already in the crypto market and he's not doing what, like he's not going where the most active people are. He's not going where the money is right now. Why is that? And the reason just because I couldn't care less. Like
yeah.
it's just
It could
not
give the
that.
wrong idea, right? It's like, oh, he's pretty experienced and he's not doing meme coins. Like, is there a particular reason? Like, but the
Yeah.
reason is almost entirely personal and
Yeah, it's
contextual.
just
So
like for me, trading something, like I said, it's just I know that these things are not going to be around and not going to be interesting. I'd rather look at the things that I think could be here long term. It's basically if you're looking for the quick 100x, that's probably the place to be. If you're looking for the slow 100x, there's other places
yeah,
to look for. And then people are gonna be like, "Hey, why the fuck would I ever take the slow 100x over the fast 100x?" But I mean, for that, you will have to
you will
kind of,
learn.
yeah, you will have to grow up a little. But I can tell you, like the slow 100x is the one that's gonna not take everything from you in the long run, right? Like like for example ETH, right?
Right.
Like if you bought like ETH at $10 and it's now trading at 1,000, uh, you're never gonna go back to like ETH trading at 10 unless the entire crypto sector just kind of goes to shit. The same with Bitcoin, right? Like if you're talking about like Bitcoin at like 1,000, like you're never gonna get that again. So like the risk that you have holding it is so much lower. Whereas like with this meme coins, for example, like there's a good chance that you can take 99% of the value of any of them in the next 5 to 10 years. So the quick answer to the quick versus slow argument is basically the slow one is not going to go back all the way where it came from, whereas the quick one is very likely to. But obviously, if you take the 100x and then just roll it into something else, I mean, then you're going to be the happier person because you can just do the quick one into the slow one. But I'm just not
No
in
one ever
that
does
game
that though,
anymore.
right? They'll go quick, 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 bust. Typically,
Yep. I
realistically.
mean, that's why the gambling comes in, right? This
Yes,
is
of
where
course.
what we talked about earlier with the whole gambling addiction comes in, because you might even be sophisticated in the altcoin trading at the start, but then
Oh
like you see
yeah,
those gains and then you see the number in your portfolio go up, and you're like, hey, I have 100,000 now. If I 10 exit, I'm gonna be able to like do like a down payment on my house or buy a house outright. So let's do that. You do it at 1 million, and you're like, oh shit, I'm like at 1 million now. And then you take the next 10x and you give yourself reasons why, like all of that, like the next 10x is gonna make my entire family rich, and then the
sure,
next
sure.
10x is gonna,
It's
and
never
then
enough.
and it's never enough. And at some point, that just doesn't have any future, right?
I mean, that was like the entire cycle of big accounts in 2021, wasn't it?
Oh yeah.
Just like huge run-ups, snowballing portfolios, and then there aren't many good stories that came out of that.
Yeah,
On balance.
I mean, free AC.
yeah. That's just the high-profile guys, right? Like think about the amount of people who, I mean, all the leaderboard people and the perp leverage people who are using their P&L as collateral for even bigger positions. They just disaster after disaster. Also, you sort of questioned why people fail to get the well, they don't distinguish between what you do for yourself for your personal reasons versus what might make sense for them. I think part of the reason for that is because of the way people do this cringy, we're all in this together, I will lead you to financial freedom type of shit on Twitter, where they're like, oh, it's the cred army, come on guys, let's do this. And they take this fucking weird collectivism around trading, and it's like one big joint portfolio and some sort of fucking inbred team sport, whereas in reality it's not that at all. But I think that's where it comes from. People are assuming that like what you're doing is what you by definition think they should be doing. Oh, and your incentives are aligned and you're all in this together, and you'll definitely let them know like when you sell and how your trading is going. I actually, for me, that's one of the biggest red flags in terms of who to trust. If I notice someone being way too collectivist, like, come on, cred army, let's fucking go, all this shit, I'm like, oh, you are not a good person. Like, I'm going to stay the fuck away from that.
Yeah, I 100% agree. It's so cringe too. Like,
it's so cringe.
I mean,
you're a grown man. Come on.
Yeah, sometimes there's like 40, 50-year-old already bald, have like 5 children, and I'm like, dude,
you love your Twitter followers more than your kids. Like, come on.
Give them more attention. But then at the end of the day, they're still getting rugged both ways.
Both the kids and the and the followers. Don, can I pull some altcoin alpha out of you? Do I buy Pepe on this weekly retest?
Oh man, let me check.
This is just gonna be a rapid fire round, then we can wrap up.
I mean, Pepe support wise quite decent. Yeah.
Okay, thank you. I've gone all in. No time for nuance. Sorry. Popcat, okay. Do I buy the all-time high breakout?
Oh, that one's hard. I just had Poocat.
Or Top Cat. I've seen that meme around.
Oh, that's also pretty good. I mean, it's a breakout.
Okay,
right?
Cool. Buying that one as well. I don't know how because I went all in on Pepe a second ago, but I'll find a way. What else has been popular? This Sheeb pullback on the daily time
now we're going
frame.
Ancient.
Yeah, into the whatever 15K level.
Nah.
Okay, fine. No Sheeb. Sui. It's very close to the all-time high. We know that tends to resolve very quickly, just like BTC. Do I buy this local pullback into 1.5 to 1.6? Because, reasons. Because it's going to go through all the all-time high and go to 1 million.
I mean, I don't know how high in the market cap listing this is, because this is kind of how I do it. When it starts breaking out and starts going to areas where you just don't know what's going on, like because you don't have any lines. It's 21, okay. I mean, there's a little bit more room, but not that much.
So I'm all in. I'm all in Sui as well. Solana, too choppy and boring. Okay, what about Tau?
Jesus Christ, you're pulling up Tau. Okay. That's also decent.
Okay, thank you. All in there. My portfolio is looking a bit levered, but it's fine. TRX.
Oh, to fuck off.
I mean, look at the weekly.
I mean, TRX, the versus the dollar is hilarious.
Yes, that's what I'm looking at. TRX USD weekly breakout had a 3-week pullback. Do I go all in?
Above 0.14. It's okay. And if it goes below, it starts looking really
fine, whatever. I didn't have time for invalidations. This is crypto. With do I buy it because it's going to go on the sphere and it's been strong? Breakout from $2 basically.
I mean, I say it's not bad at 1.7 and it's still not bad at 2 point whatever.
Got it. Okay, added that one to the list. That's it. S&P 500.
Jesus,
probably the one you're most comfortable with.
I hate this.
This is a new segment.
I hate this so much. I mean, the S&P also doesn't look that bad.
Okay, so basically, I went through the entire watch list. You told me to basically long everything.
I mean, I'm just saying it doesn't look so bad
Sure.
because you don't give me any room to actually talk. So
Sorry, no time. Very long show.
don't take any of this as financial
No, obviously
advice.
it's not.
This is just a
It's not.
2-second look. I don't even know what these coins do or whatever
The
the fuck.
coins never do anything, Don. When will you learn? If a decade in crypto isn't enough, God help you.
Yeah, I mean that's my secret alpha. I just don't know what these coins are
Like, what do these
doing.
coins do? Ideally, go up. That's kind of the name of the game here.
Because if you know what these coins are doing, you're not gonna buy them.
Yes, exactly. It's like using crypto tech, right? Like if you actually try to use crypto 9 times out of 10, then
Oh yeah,
it
never
makes you
use it.
so bearish.
I mean, to be fair, you really should be using it because that's where I think that's where the biggest alpha is. The more you
Yes.
get into it, you use it, and then because there's a bunch of basically, I mean, just for using it, you get a bunch of airdrops when
That's
you're
true.
using it in the right times, and also just learning what this shit actually does and what is complete trash and what isn't. But if you use it, you're also gonna get bearish. So you're gonna have to keep that in mind and kind of just look at it from a lens of all of this is shit. What is least shit?
Yes.
And then you kind of go from there. And then the least shit is actually really good just because it has crypto on it. And then if you go from there, you're gonna be just fine.
So much
But
alpha.
if you if you look at it from is this good or not, you're gonna have a bad time. You need to look at it, is it better than the others, and then you're gonna have a decent time.
So he's a centrist and a moral relativist. Fantastic. Some really strong views here, Don.
Yeah, it's just how it goes. Huh?
Any final questions, comments, concerns, or financial advice? The last one's a joke, obviously, for our lawyers.
Oh, I would have given the best financial advice, but now that you say this,
Oh, yeah, okay.
I'll keep it to myself.
Thank you. Thank you.
No, I mean, it's going to be an interesting, like, this is an interesting weekly close, and next week might actually start being interesting given the area we're at. I don't want to lose 60K too long, which is very, very close to where we are right now. So that's decent invalidation. And then just see how it goes. But generally, like right now with the macro situation, and we didn't even talk about this.
Thank God.
Yeah, I mean, it's better not to, but just it's really hard to make accurate judgments. And with the price being where it is right now as well, basically all-time high. Like it's really easy when price is down like 70% on Bitcoin. You're like, oh, I can make bets on this. And I feel relatively comfortable. Now it's at 60K, almost all-time high. Macro's wild, so it's really, really hard to make decent bets. So don't be too sad if you're kind of like, if it's not going your way too much, because like I said, right now it's really hard. So,
That's
but
all
if
from
it,
us.
yeah, if it gets to you, don't be a pussy.
Yeah, if the market's getting to you and you're considering quitting, you should quit, you pussy, or something like that. Yeah.
Oh, that's such a good,
Fantastic quote.
Yeah, I think he lost it all though, if I remember
Oh
correctly.
God,
The guy that made it.
Yeah, Cash Boy.
Yeah, I think so.
Yeah.
But I haven't seen him around anyway. And
I haven't either.
a few of my friends told me he lost it all, but I'm not sure if that's actually accurate or not.
Well, at least he's memorialized by a banger all-time quote.
Oh yeah, that's an all-time quote.
It's like the store makes BT one. Do you remember? Down in BTC, down in USD, up in this bitch or something.
Well, that's a good note to end on, huh?
It is. It is. Before you click off, leave a like on this video, subscribe to the channel, leave us a comment about all the philosophical bullshit. Maybe some of it was helpful. If it was, maybe let people know in the comments before they click off. That'd be wonderful. Thank you to Woo for supporting the show. The social trading stuff is very interesting. I trade once a year, and Don hates everything, so I don't know if we're the best fit for that type of stuff. But I'll probably post a write-up on it in the near future. It's genuinely quite interesting, especially if it becomes more of a strategy marketplace, as mentioned on Monday Markets, as opposed to a KOL long-short type of thing. But that's all for the future. Hope you all have a wonderful weekend, and we'll see you next week.
Bye-bye.